Welcome to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG. We now have the pleasure to welcome Walker Kinman, the CEO of LMK, to the stage. Please go ahead.
Thanks a lot, Johan, and glad to be here for all of you watching. Very happy and proud to present LMK Group, our business case and investment plan. My name is Walker Kinman. I'm the CEO of the LMK Group. So let's jump in. First of all, the LMK Group has been innovating the mealtime experience since 2018. So who are we and what do we do? We are in the meal kit business. If you are in Sweden, you perhaps know our brand in Sweden, Linas Matkasse. We do about 40% of revenue in Sweden. If you turn to Norway, we actually do a little over 50% of our revenue in Norway with two brands, Godtlevert and Adams Matkasse. If you're in Denmark, we operate under the brand Ret Nemt, which does the rest of the revenue. And if you think about meal kits, we are the largest supplier of meal kits in the Nordic market, and we're also a leader in Scandinavian food tech. We have a very strong heritage in innovation and entrepreneurship. And operating a meal kit model, it's a subscription-based, demand-driven business model that delivers a meal kit to the home, and I'll get into the detail what that is. But we have very little inventory, and we do a lot that reduces food waste in the whole supply chain and for the consumer. This last year, in 2021, we listed on the NASDAQ First North Premier Growth Market. We've been listed there since March, and the ticker symbol is LMKG. Give you an idea of the dimensions of the business. We did just about 1.4 billion SEK in revenue for 2021. We delivered over 23 million meals during the year and finished the year with over 100,000 active customers. Our distribution network reaches over 80% of Scandinavian households in these three markets where we operate, and we have around 470 employees working for the group. So just a little bit about meal kits, first and foremost. A meal kit is a very planned food experience, and you could call it curated. The process really starts with recipes and planning, and we do a lot of work in planning stage. We plan our protein 6 months in advance. We do detailed order estimates to our suppliers 10 weeks in advance. We continue doing that all the way up to the point where a customer orders their meal kit and the order is closed. Then we go out and we actually order exactly what's needed to produce all of the meal kits during the cycle. We do that in our own production facilities. We operate 3 in Gothenburg, Oslo, and Helsingør in Denmark. We deliver those to the home of the customers with third parties. The customers have all of the ingredients and the recipes and instructions that they need to prepare a meal for the family. They enjoy that, and then they give us feedback. We get lots of data that we use to analyze and further develop our product concepts, as well as feedback into the planning stage. So let's focus on key investment highlights for the LMK Group. First of all, we're a category inventor. We've also have a very scalable operational platform, a proven business model with our profitability and cash flow. We have strong exposure to mega trends. Sustainability is at the core of our business. We have been advancing personalization in a very rapid pace over the past years, and this paves the way for future growth. And we also are profitable with strong cash conversion. So let's look at this a little bit closer. The category inventor side, we've been operating in this space for over 14 years in the Nordics. As I said, we reach, with our distribution networks today, we can reach over 80% of the households in Norway, Sweden, and Denmark. Our brands are very strong with things like high top-of-mind scores, and it's also giving us the ideal platform for further product line extensions and growth. When we look at consumer surveys and we compare this to our brands, they rank high on innovation, quality, healthy, well-balanced food, and excellent taste. Finally, we also have a state-of-the-art infrastructure platform, which we've built ourselves and is next generation. So if we think about the scalable operation platform, this model has been evolving for over a decade. It has given us profitable scalability with high accuracy and low customer complaints. Our transportation is fully outsourced to third parties. We don't have any transportation assets ourselves, but we operate very closely with our partners to control the flow of our meal kits to the final customer. We've integrated our operations across Sweden, Norway, and Denmark, Today we're operating on one technical platform with one production technology that we use to produce a highly personalized meal kit today. We have a very hard to replicate procurement network. We work with over 100 different suppliers that are very local and have been established with long relationships. And finally, as I mentioned, our technology is self-deployed, and we use everything is the same in all three of our production facilities and our operations. So let's take a quick minute to look at the business model. This is a proven business model for us. If we look at it, you can see a subscription e-commerce model is somewhere between a SaaS model as well as a regular e-commerce model. The customer acquisition payback is far shorter than the SaaS model. At the same time, our repeat revenue outclasses regular e-commerce type of models. So with this subscription model, you get high retention rates, a loyal customer base, you get higher order frequency, a good demand predictability, and also with the way we have been able to structure our business, strong cash flow conversion, and negative working capital for growth. So meal kits are really tapping into a global trend here. It's an increasing shift from offline to online, and online penetration of food is still limited in the Scandinavian food market, but obviously with COVID and the pandemic, we have seen an increase in an acceleration of uptake in e-commerce food. There's also an increasing awareness of food health relationships. So things like vegetarianism, humanitarianism, environmentalism are on the rise, and we tap into that with our products. There's definitely a call for action with regards to climate. And a lot of consumers around the globe are definitely and probably willing to change a behavior to reduce their impact on the planet, which ties into our business well. And finally, the new convenience. Longer working hours, commuting, active lifestyles, all are driving consumers towards things that make life easier and simplify life when they're time squeezed. So as you look at meal kits, less food waste, local suppliers, a demand-driven supply chain, healthy cooking made easy in the home, flexible meal choices, perfect portion sizes, less carbon emissions, and saving time for families and households around the mealtime experience. Sustainability has been with us long before sustainability was a buzzword. And a big part of that has to do with reducing food waste, both with our suppliers and with our consumers. We deliver a perfectly balanced meal. We only order food that we deliver, which means that the food waste generated in our own production is only 1.8 grams per meal during 2021. We're teaching customers how to cook without creating food waste, which has an even bigger impact of reducing food waste in the home. And then we also work with our supply chain, even from forecasting so that things are not overproduced to using odd cutting details and reduced packaging material, because we don't need the grocery store presentation in our production and operations. If we look at 2021 and sustainability, we adapted a new sustainability policy during the year. We've begun reporting on food waste in our own operations. We launched climate-calculated recipes so that consumers can also be active in and understanding how their choices have an impact on the environment. We've gone through an exercise with purpose and culture statements to really drive a strong employee engagement in all areas. We work around a tool we call the compass that helps us in orientation in all sorts of decisions within our enterprise. And finally, we also introduced a plastics promise during 2021 with a reduction of plastics in our meal kits by 20% to 2025. So when we think of impact areas, we talk about food waste, we talk about food products, resource consumption, health, and social responsibility. Let's take a look at personalization and how it paves the way for growth. We are in a business been operating for a long time, and if you knew, for instance, the Linas Matkassa brand in Sweden 5 or 10 or 12 or 14 years ago, you see a completely different product today in what we offer. The market in the Nordics has moved from fixed meal kits to flexible meal kits. So what does flexibility and personalization mean at different levels? For one, it's the service level. It's also the delivery days. It's the meal selection as well as adjacent products that you can order with your meals. And if you look at our business today, we've gone from not being able to choose really anything except a fixed menu for the week to today, we offer, even in Sweden, we offer 83 different recipes to choose from that can be delivered to every household within our distribution network every week. So a lot of choice in talking about personalization. When we look at service levels, we've shifted from 6 to 14-day order to delivery times and even bi-weekly delivery models. Today, our order to delivery times at most are 7 days, and we operate on a weekly delivery basis everywhere we go. Our delivery days have been 1 to 2 days, with differences in different countries. We're aiming, and this is the area where we have still the most to do in the future, but multiple delivery days in all of our markets. And when it comes to adjacent products, we've also expanded what we offer in terms of adjacent products, including a mini free pick model with groceries that we deliver as well every week, up to 150 different very common household items. You can think eggs, butter, milk, cheeses, breakfast items predominantly, as well as after-school snacks for households. So we completed a transition during 2021 to 100% customer unique production capabilities in our production facilities. And this opens the door to some really interesting product and service innovations going forward. When we think about growth, this and the personalization, it's also fueled by 3 different key levers when we think about growth. So a basic model: increase the number of customers, increase the order frequency, and increase the average order value. So when you think about customers, we have expansion of customer segments via increased product and delivery flexibility in our potential grasp. We have increased penetration in the current markets and customer segments. And we also look very much towards marketing efficiency to continually improve the marketing efficiency of the money that we spend to attract new customers. When we think about order frequency, it really comes down to flexibility. Order frequency driven by things that will keep the customer coming back, increased product flexibility, increased service flexibility, and enhancing the digital and physical customer experience. And finally, on average order values, expanding into our mini free pick model has increased average order values. We also use AI and machine learning to give recommendations to customers on upsale, premium recipes that customers can also select from and pay a little bit more to get an even better recipe with maybe a little bit more expensive ingredients to prepare at home. And then finally, also, we've talked about the introduction of ready-to-heat in our latest earnings call, and we'll be expanding the addressable market within the existing geographic footprint. And finally, looking at profitability. So we talk about profitability with strong cash conversion. We start with a good customer base of loyal customers. Our average customer has been with us for over 2 years. The amount of revenue that we generate, which is repeat revenue, is around 94%. So this is really, as a subscription model, it's about loyal customers and it's about repeat business. Our customer acquisition economics, we targeted around 6 months of customer acquisition cost payback. Our unit economics and margins, if you look at 2021, we did roughly 204 crowns of contribution margin per delivery, and we had an adjusted EBITDA margin of 7.6% during the year. When we think about the cash side of the business, negative working capital is inherent to this type of business. We collect cash from customers in a very short cycle. We pay suppliers basically on 30-day payment terms. So if you look at the working capital, we run about negative 5% in working capital. On the CapEx side, it's also a light CapEx model. 2021 was one of our highest investment years where we introduced significant change in production technology, and we integrated our Danish business and completely changed operations in Denmark. And we saw CapEx come in at 2.2%, which will be much lower going forward. So foundations for profitable growth are in place. If we take a breakdown on the unit economic side and look at our business model, an average order value, 100% of revenue, our cost of goods sold is made up of food cost and packaging cost, as well as our staff and experienced personnel that are doing planning and sourcing activities. It's roughly about 43% of the cost that goes into our cost of goods sold. When we look at the fulfillment side, we look at production cost and we look at logistics cost. You can think of this as roughly 22%, which gives us a variable contribution margin, excluding fixed cost, of roughly about 35%. as we look at contribution margins approaching 30%. So we have a very solid unit economics model, and we have a lot of tools to control unit economics, both in terms of how we control the content of the meals, how we control and forecast pricing with suppliers, as well as purchasing power in terms of adjusting prices as needed and given market conditions. So finally, to summarize, we've been in this business for a long time. We're a category inventor, and we have a scalable platform with a proven business model. We're in a position to benefit from megatrends, and our business will benefit from those as they continue. Sustainability has been with us for a long time, with a very much a focus on reducing food waste in both our own operations and how we work with suppliers and in the food distribution chain, but also in educating customers, and we're very passionate about that. As we increase personalization, this offers a growth vector for us, and we have changed our operations to be completely 100% customer unique in every delivery that's given. And then finally, with a profitability and a strong cash conversion, we offer investors the possibility to invest in a company that is already proven their business model and is profitable today. So with that, I'll just conclude my remarks. Turn it back over to Johan.
Thank you very much, Walker. So a few questions from me, and I want to start to talk about margins. You've obviously, as many other e-commerce players, seen contracting margins during 2021, partly increasing customer acquisition cost, partly freight rates and the likes. Where do you see this going forward, and what's the sort of way back to the 6 to 8% margin target?
So for us, we've gone through a year of quite a bit of change. So for us on the margin side, we are targeting 30% margins in our business. We have a path to get back there, and that has a lot to do with the introduction of Pick to Light, which is a technology for personalization, slows down efficiency in the short term in our operations, and that increases cost on the production side. But we also have some significant initiatives when it comes to supply chain management. We have fully integrated the business across all 3 markets now. And for the first time, we have adapted the organization to be able to take advantage of purchasing power on the margin side. We made a lot of investments in marketing in 2021, and we increased our marketing by over 35%, a significant increase in terms of total costs that we put out on the marketing side. And I think, over time, what we say is we control sales and marketing, and we keep that under 13%. So this for us is a way to maintain margins in the 6 to 8% range over time.
Great. And then I want to talk a bit on this same topic and competition in general, but also these new players coming up as of Foodora Market and Kaval and the likes. How do you assess the general competitive landscape, but also these new players coming in, and how those affect the general margins in the industry?
Yeah, so quick commerce has a lot of players coming in. There's a lot of capital that was allocated with lower cost of capital to new ideas within quick commerce. I think fundamentally everything has to reach a point where you are achieving profitability, and that is something that we're very proud of in our business. I think over time we're starting to see exits in the quick commerce space for players that have not achieved scale or don't see a path to scalability. Over any competition impacts margin. I think that's pretty clear. Consumers will at times have a preference for something that's even more convenient than the convenience that we offer in terms of making meals very easy in the home. We're not going to be able to compete directly with a 20-minute delivery of a meal kit. But I think on the other hand, what we can do is we can offer very affordable, convenient food in a more structured manner. So while you have other competitors that will be able to offer that at a much higher price point, we can give a very good price point with a lot of convenience in a meal kit offering.
That makes sense. And then you touched on it a bit as well, the increasing average order value and the sort of premiumization of some services and the likes. Do you have an idea of how you stand versus your direct competitors in terms of the average order value?
We because of the strength of our brands and because of how well we're known and the quality of the product that we deliver, we do have the ability to charge slightly more premium prices in our markets. We have other competitors coming in that are looking to compete on price. One of the things I say in this business is that we don't sell food, which of course is a complete lie. We sell great food, and it's very good food. But what customers are actually paying for is they're paying for the service of the meal kit. So by driving the service side of the equation, we have the opportunity to continue to have good pricing power in the market. I think when you look at average order values, the other thing that really has affected our average order value, and is something that we're working a lot with, is in the realm of AI and machine learning. What we have is a tremendous amount of data, and in that data we can also see very strong correlations between what people buy in certain groups and what others are likely to buy, and offer those likely to buy scenarios. It also gives us the opportunity to put premium products in front of customers in a way that gives them the opportunity to pay a little bit more and get something that they're likely to like, because we know other groups of customers like it. So I think we're very much tuned into driving increases in average order values beyond just pricing power in terms of what the offering and the service offering is about.
That's great. And then I want to move on to the maybe obvious question as what's happening in the world currently, the Ukraine and Russia situation. Obviously, no particular exposure for you in those regions, but maybe there are some indirect effects in terms of raw material costs and freight costs and the likes. Can you sort of explain and elaborate a bit on how this affects you?
Well, obviously distribution is part of our business model, and one of the benefits to the customer is distribution of food directly to the home in the form of a meal kit. So anything that ties into energy costs that are related to logistics and transportation has over time will have an effect. And I think the volatility that we're seeing in oil prices right now, we don't know how that will shake out in terms of how it impacts carriers, other than that their costs have increased substantially. I think the other impact that we're hearing about, but we're not seeing yet, but I'm sure will come if there is a protracted conflict that affects harvest and whatnot in that region, is the price of wheat. And as wheat is a staple product that affects many different types of products, I think over time that's an area that indirectly begins to affect a very large portion of the food value chain. It also drives different areas within food production. So,
great. And then a last question from me as well, and this is regarding the market growth. And we're obviously in a quite interesting scenario where we actually see contracting market growth rates for several e-commerce industries, and so for you as well. When do you see this market returning to growth, and what sort of growth rates do you see in a complete post-pandemic society?
Yeah, I think from our side, what we have communicated about our own business is that we do expect contraction here in the first half of the year. When it comes to further beyond, our base case is that we will see growth commence again in the second half. I think from the long-term perspective, there's a lot of volatility right now in this whole in the market when it comes to e-commerce and e-commerce food, and we see this not only impacting players like ourselves, but also the broader e-commerce food spectrum. I think in the long term, habits are changing. Food is becoming much more accepted as something that is delivered to the home. The capabilities to do it in a fashion which also beats traditional retail models with very low food waste is very appealing for many customers, as well as the ability to get a great variety of food there. You don't have to do the work other than just click on a button and say deliver. So I think growth has potential, and we target growth that is double digits over the long period. And I think when we say double digits, we're saying very low double digits. We talk about 10 to 12% growth. We still think that that's feasible in the long term. The challenge short term is quite obvious. There's some very difficult comparable figures out there for us all over the next 12 to 18 months.
Great. With that, I'm out of questions. So I want to thank Walker for presenting today and everybody for listening in. Thank you very much.
Thank you.